Good morning, everyone. Welcome to the Current and Future Truth of Cyber Insurance Coverage virtual panel. My name is Christian Cruz, and I'm in charge of market development at Alvaka Networks. Before we get started, just wanted to mention a few items. Today's session is being recorded. The panel discussion portion will be approximately 30 minutes, followed by Q&A. Your audio and video are muted by default. So when we get to the Q&A portion, please post your questions in the chat box and we'll get to as many as time permits. Your panelists today will be David J. McNeil, Principal at Epic Insurance Brokers, Paul Fuller, CEO at Allied Public Risk, and Kevin McDonald, COO and CISO at Alvaka Networks. So with that said, I will turn it over to David and we can go ahead and get started.
Good morning, everyone. Thanks so much for joining us. Before we go too far, I wanted to thank Oli Thordarson and Alvaka for hosting this. I think it's kind of an important topic. And I got to tell you, not including me, the guys on the panel here are published authors, great speakers. And so you'll have to live with my part, but they're great. Okay, so we're here today to talk about the cyber insurance and what's going on there, because we certainly are going through a big change right now. Cyber crime as a whole, as you probably have heard, is just exploded. To give you an idea, and I'm going to do the quick 50,000 foot concept here. To give you an idea, we did hit the projected number last year for 2021. Cybercrime was $6 trillion. $6 trillion, if you were to convert that to like a gross national product, gross domestic product, it would make it the fourth largest country in the world. So that gives you an idea of how big the issue is. Okay, with that, I think that what I want to do is, I know that Paul has a great summary of the way that he's been thinking about it. Of course, being the CEO of his company, he sees an awful lot of this. So Paul, what are your thoughts?
Well, thanks, David, and hello, everyone. Look, the cybersecurity insurance marketplace, it's bad. It's as bad as California wildfire, and the singular reason is ransomware attacks. And what we're finding is cyber insurers, they're seeing an exponential rise in demand payments from ransomware attacks. And the challenge for the industry is these attacks are systemic across all industries, but in particular, essential service providers are being hit with the most potency. And ultimately, what we're finding is a distortion in the industry when it comes to lost dollars paid versus premium dollars collected. And that reality for you as a buyer is a spiraling effect where rate increases, they're rising by 50%, sometimes higher. Deductibles are doubling, sometimes tripling. And then the ransomware coverage, that limit, which is so important, we're seeing that limit being reduced in the industry. And what I just shared with you, that's for insureds without cyber losses. So it's pretty bad. Now, in terms of solutions, obviously, any solution has to be customized by industry. And what I'd like to do is share with you what one industry, one that I'm affiliated with, what we're doing to tackle this problem. And it comes down to an association that's called Cal Mutuals. They are providing California water utilities with a partnership with Lloyd's of London. And this is something any industry can and should do. Now, Lloyd's of London, they're the largest writer of cybersecurity insurance policies in the world. What they agreed to do for California water utilities is to freeze the rates, freeze the deductibles. They even offered proprietary coverage on the cyber side that water utilities need. And they offered an array of vendors and support services for water utilities. In fact, we have a partnership with Alvaka. They're an integral part of this array of partners. However, there's some pain for water utilities. In order to have eligibility for this, what I'll call affordable and properly designed cybersecurity insurance policy, there has to be a heightened level of security for these buyers. What that means is the buyers, in order to qualify for this stability, this affordability, and a properly designed cybersecurity insurance policy, they have to heighten their patching. They have to install 2FA. And for our industry, they have to show separation or an air gap between their IT and OT systems. There are some other requirements, but ultimately, I think Lloyd's got the balance right. And the reason is there is no way to offer an affordable and properly designed cybersecurity insurance policy. And you've got to combine the two. Price is one factor, but you have to have relevant coverage. The only way to combine those two is if there is confidence that the buyers have elevated their investments regarding mitigation, and that the likelihood of a breach or the likelihood of a devastating breach, if there is one that pierces the system, is reduced. And so you've got to, as buyers, look at this interlinkage between investment mitigation and risk transfer, or what we call insurance. And if there's, a takeaway, at least from my side for the group here, it's to acknowledge that insurance is important. It's very important for the reason that David's mentioned. The cost itself of cyber attacks reaching $6 trillion when you throw everything into that number, it requires, it's an existential threat if you don't have financial protection. But what insurance also does is provide you with a team of experts. And this is critically important because you do need that team of privacy attorneys, crisis managers, data forensic professionals, expert negotiators, as well as a patching firm that can fix the problem. And you can't assemble this team after a loss, after a breach. You need to have it in place beforehand. It's the only way to deal with the drama. And there needs to be an acknowledgement that insurance is kind of the last stop on the train. Mitigation is really the only way to properly protect your community goodwill, your reputation, and hopefully the likelihood that if there is a breach, that it can be controlled and managed. Even if you have insurance, you still don't want to be in a position where you are backfilling the problem. And so if I can, share with the group one final message, it's this structure that Cal Mutuals has put together for California water utilities. That is a structure that other industries can and should follow. And I'd like David, because, in addition to being the moderator here, David's one of the largest brokers for cyber insurance in California. He represents multiple industries, large clients, medium clients, small clients. And David, if you don't mind, I'd like you to share your thoughts on what I just spoke of in terms of my encapsulation of the state of the marketplace, perhaps some pain that your clients are facing and you as the messenger and negotiator, but also some solutions that you are seeing, that you are designing for other industries that you helped replicate with us on the Cal Mutual's water side. So David?
Sure. Yes, you mentioned mitigation, which is huge. Okay, this has been fairly thought of as a small problem, or at least in the shadow problem, for a long time. The truth of the matter is that the bad guys go after the low-hanging fruit. Okay? And the truth of the matter is, if you don't want to spend some time and some money to do just some basic, like keeping your patching up to date, having multi-factor, as you used to call it, two-factor authentication, maybe having some network segmentation, just some of the basic stuff that we do, that alone will elevate you to the point where you are a much better risk in the eyes of the insurance world. Now, insurance, look, I'm not a fan of insurance, right? I always try to find other ways, and insurance is the last. It's an expensive option, but it's there when you need it. Okay, so think of it as, in my opinion, you're making an investment. Insurance usually works through actuaries. They run their life out of the rearview mirror. Okay, they start, what did we have? What did we lose? What did we make? Okay, and up until now with cyber, we really haven't had a lot of that information. So quite honestly, it's been underpriced for a long time. Now, with an increase in frequency and an increase in severity in terms of ransomware demands and the how often it happens, all of a sudden they're starting to get enough data that they're looking at it and they're freaking out. And they're like, oh my God, we're way underpriced and we're giving the store away. Okay. And they're getting their butts kicked, quite honestly. All right. So what happens is you've had folks leave the market. You've had certain carriers leave the marketplace. Not good. Now, you've had a few guys come in. But what you really have seen, and I've seen it with my own clients, you have, as Paul, as you mentioned, you have a reduction, a cap, or even an elimination of ransomware, or at least a sublimit of some sort. Okay, you've had great increases in, I'm going to call it deductible, actually self-insured retention, but for purposes of discussion, a deductible. Those I've seen those go up. In one case, went up 5 times on the premium, and at the same time that the premium went up 5 times, the coverage went from a 5 million to a 3 million, and at the same time it went from 5 million to 3 million, the deductible went from 25,000 to 75,000. So you had 25 to 75,000 on your deductible. You had a 5 million old limit to a 3 million new limit. You did have a cap on ransomware, and you had 5x the premium. That was a shocker. Now that's one of the worst ones I've had. It was a shocker. But a lot of them are doubling in price, even to hold that. But deductibles are going up. It's just the math. All right. If they're going to stay in business, that's what has to happen. So that a little bit there. We can come back to that some more. But Kevin, give me some of your thoughts on the market as it is right now and what you're seeing on the other side from the actual clients who are getting hit by ransomware.
So there's a couple of thoughts I want to start with. One is that the recovery of ransomware assumes that the threat actor can allow you to recover. There are some significant concerns and changes that we're seeing from the current environment between Russia and Ukraine. For example, we're seeing wiper attacks happening where they're literally just erasing the data. So we're getting to the point where insurance will not help you when they just erase and walk. So it's very important to start understanding that mitigation and disaster recovery and business continuity are really the only way that we're going to survive long term. So let's set that as the baseline. The other thing we're seeing is the early days, 5 years ago, even a year and a half ago, insurers were very loose about what was cleanup and recovery versus what was extended or enhancement or improvement. And there was always a little pushback, but in general, we could negotiate our way into helping do some things that would prevent the next attack, keeping everybody more in line with, not making sure they don't get hit again. When in fact now it's like, nope, we're going to pay to get you back up, and any improvement is on you, and you really do need to be moving towards that. We're also hearing some conversations now about these questionnaires. We have had a dozen questionnaires come to us over the last few months from clients that had never had to answer more than a couple of questions. And one of the questionnaires was 61 pages long. And it was all of the answers that you have to provide of the things that you're doing in controls and what framework are you working in? Are you using NIST? Are you ISO? Are you doing encryption in transmission and at rest? And all of the MFA is a huge one. Are you patching everything? Not kind of, but are you legit closing vulnerabilities, and do you have a vulnerability management program? These things have never really come up as a resistance from insurance until of late. Now, it's always been there sort of as a shadow, but I've never seen it negatively impact a client. We had one this week who said that the remediations required to do their insurance would be 10x the revenue of the company. This is a small company. So he's now uninsured. I mean, that's basically he cannot afford to get insurance. And that's the unfortunate part of having so many organizations having done such a poor job of defending themselves over the past few years, and the miscalculation by the insurance companies of paying millions of dollars for even a very small company potentially to recover. The other issue that we have to be worried about is that in the current environment, it may well be illegal to pay a threat actor. It's always been a question of whether you are paying an embargoed or an organization or an individual that's on a terrorist list, but that's kind of been okay, wink, wink, nod, nod. Let's look it up. Let's make sure. But right now, if you get hit by a Russian associated threat actor, 75% of the cases in the last couple of years were seen to be in some way associated with that block. And the insurance company finds out in this environment, they're going to likely declare it an act of war, and you're going to find out you have no coverage at all. So that once again goes back to this point of making sure you have a backup and a disaster recovery that's truly separated, that you are defending yourselves rather than praying and insuring.
Oh, one of the things I'm going to jump in, one of the things you said there, which, you know, people may have heard me say before, but when you're talking about being unrecoverable, having things being you can't afford it anymore, right? This is where you really have to sit down, and I always say, you know, take the best and leave the rest. You need somebody that can go through the policy. Maybe there's some things you can drop off to reduce the price if you don't have that exposure as much, or if you're comfortable with your mitigation on that one. Okay, maybe you can give a little bit away because you're comfortable, you're relying on your own mitigation, you can reduce the price a little bit. Or limits. You probably are not going to be able to insure yourself for everything at all time and completely insulate yourself here. It's not going to happen. But if you sit down with your broker, if you sit down with your CFO, and you say, okay, here's what we're actually doing. Here's the crown jewels of the company. What are we doing to protect that? How much do we spend on that? You know, and how much can we spend? And we balance out our tolerance for risk with what the affordability is of the coverage. You're going to be able to come up with something. Okay, I would say, just make sure you live to fight another day. Okay, you don't have to insure everything to the last dollar. You want to make sure your company survives and you can live to fight another day. That's my initial response to that.
I want to add one thing, if you don't mind.
Sure.
You mentioned the privacy or breach attorneys, and I think it's important for people to realize that they not only help you with the advice of, well, how are you going to respond? What are you going to say? They provide that layer of potential privilege that could protect conversations and reporting, et cetera, that has happened as part of the event. But they also can help you fight the fight in the coverage world, because they can advocate for the defining of what happened, or whether or not you may have misrepresented or misstated something within your form if you get a bad faith claim in the future or something like that. So I think it's important to have legal coverage from the first moment. First of all, in order to get that layer of privilege, you need that. You can't go 4 days into a situation and then go, oh, gee, I guess I should probably have an attorney. You can, and it's better to not have them at all, but it's nowhere near as good as if that attorney is hiring the individual, or at least advocating for that hiring of a remediation or an IR firm, or both. So
yeah, I would add to that there's a thing called a panel that these insurers use. Okay, and so if you have somebody in mind, a certain PR firm, you have a really good attorney relationship that has experience in this, if you have some certain key components that you already are doing business with and you're comfortable with, it generally isn't a huge problem for you to get the approval to use them on your panel and consent provision. Okay. But you have to do it ahead of time. You can't, when the house is on fire, you can't do it then, right? You have to do it when you're first negotiating this. You do a thing in writing saying, this is who we'd like to use. The insurance carrier calls the attorney or whoever it is, gets comfortable with their expertise and whatever the numbers are, the contract, and then they're usually pretty flexible on that. They'll either add them to their list of panel attorneys or make an exception for you. It's not that hard to get that done, as long as it's done in the calm and in the negotiation phase, not after things have already blown up.
And whatever and that's a good point too, because then now you're not waiting to do something while you get that attorney approved or whatever. And the attorney is also important from the perspective of, most states and internationally have pretty extraordinary requirements for reporting now. And the determination of whether that reporting is required or how is done by an attorney. Don't ever try to make that determination yourself. It might be one of the biggest mistakes you ever make. And they may tell you, you do need to report, but you only need to report in this fashion and to these people, versus you going, I don't think I need to report at all. Or worse yet, you report to a bunch of people you don't need to, and now you've just created a quagmire of legal problems for yourself and your company. The other thing is, be silent publicly. Do not speak to the press. Do not speak to anybody outside of your organization, because you are wiping out any chance that you have to be defended under the point of privilege if you do that.
I'm going to add one thing to that, and that is that as part of your disaster recovery, or at least your response program here, you should have a single voice. If there's going to be someone, especially if you're a larger company, it's going to get out to the press. Somebody's going to knock on your door. They're going to call. You need a single voice. You don't want them calling in and any CSR that picks up the phone starts saying, "Oh no, this is what's going on over here." You want to make sure that everybody internally understands, Bob or Sally or whoever it is the only person who speaks to anybody outside, so that you really can control that. Otherwise, as Kevin mentioned, you can get yourself in kind of trouble with that not too far down the road.
Paul,
Yeah,
Paul,
guys,
the changes.
yeah, I'd like to just add a couple of comments to
Please.
what David and Kevin are saying. There's so much complexity in these contracts for cybersecurity insurance policies. I do recommend that you look at a trade group, you look at a professional broker who specializes in this line of coverage. Kevin had mentioned war, and war is an exclusion on every policy, whether it's property, business liability, or cyber. However, there is this gray area of state-based actors that are moonlighting. And you need to have that clarification with your insurance company that if there is a state-based actor, but it's really off hours, that there will be coverage for that. These are articulations that need to be codified. Second to that, this array of experts that you're buying with a cyber policy, it's important. And there's some really good insurance companies out there that specialize in the cyberspace. They have a panel, a team of experts. The crisis managers or the public relation firms are critically important because they will be your voice. And to Kevin and David's point, you do need to, you've got to identify an individual in your firm to at least start the initial conversations with full awareness that less is more, and that you deflect or redirect the press to that crisis manager with a properly designed insurance policy. You will have that team in place. And then if you do have that relationship with an attorney that knows your business, that has expertise on the privacy side, absolutely in advance, get the attorney on panel. So if there is a claim, it can go to that law firm or to that individual. Or if not, have the attorney at least review what you are looking at, so your attorney is clear as to the steps that you will be taking in the event there is a breach, both in terms of protecting your rights under the policy, but also communication wise, where you protect privilege, you protect your goodwill. There's a lot of moving parts here. I don't want to make this appear overly complicated, but it is complicated. And if you can have that confidence of a trade group, we mentioned Cal Mutuals, it gives everyone a calmness that the policy has been vetted, it's been qualified, and it represents a best-in-class product. But secondarily, to have a broker that understands the uniqueness of the policy provisions, but also these extra steps, particularly when you are assembling the team of attorneys, but also the public relation firm and the interaction with regulators that we haven't talked about. That's just as important as your discussions or through your negotiator discussions with the bad criminal actor. So I wanted to emphasize those points, mostly in support, Kevin and David, of what you were saying.
I would say also that one thing that I've always said is extremely important is to understand and negotiate the definitions. The definitions in the policy can make or break coverage. They can have the greatest effect. So you kind of need to know what you're looking for on that one. And for instance, Kevin mentioned, notification issues, and what typically state by state, there's legal liability for notifications. But if your broker understands the whole thing, he can also negotiate involuntary notification, which means the insurance company will pay even if you're not waiting the 30 or 60 days or whatever your state is and that particular thing. You decide that at 21 days, you need to let people know this. You can do a voluntary notification, and then the policy will respond. Otherwise, it's out of your pocketbook, right? There's lots of things like that. We want to look for words like, or little phrases like duty to defend and pay on behalf of. That means that you're not stacking up bills and trying to turn it in for reimbursement a year or two down the road and stretching yourself thin. That means from day one, the carrier is going to start writing the checks for these things. Okay, so little things like that, but those are critically important little things, in the definition. Go ahead, Kevin. Kevin, you're muted. Kevin, you're unmuted.
So talk about the trigger point. Sorry about that.
Yeah.
Where, some people don't realize that some insurance kicks in when there's been a determination that a breach occurred. Well, you could spend $1 million determining that a breach has occurred and showing it. So we've seen this in the past, and so you've commented on this before. Explain the differential for folks if you can.
Let me give you my example. I know that you're probably referencing my hypothetical sort of hypothetical hospital example. So there's a hospital and they're doing a major backup of all their records, and they put it in the trunk of a car and they're driving it off to an Iron Mountain type of a thing, and the guy stopped for lunch, okay, and he comes out and the car has been stolen with all the records in the trunk. So the question is, do we have a breach? And the answer is, we're not sure yet. It depends what state you're in, okay? And it depends what it is. You probably don't have a breach, okay? You probably do not have a breach right then. Now, time goes on, 3 weeks go by, the board of directors are freaking out, and they decide we need to notify. We have to notify. So they spent $250,000 doing a notification. And again, they did not have the voluntary notification little thing, which costs almost nothing, but you have to know to ask for it. Anyway, so they did not have the voluntary notification, cost them $250,000. It would have been an easy, simple fix. Now, the good news on that one is I think the legal liability was after 30 days, if I remember correctly. Then they would have had to notify, okay? They didn't wait. And the car was ultimately recovered and all the seals were still intact. And so there was no breach. But it's interesting when you stop and think the car's gone, we've lost control of all of that information. Is that a breach? And it's not one that you can answer right away. You have to kind of go through a few things. So I think that's what you're talking about. Okay, Paul, any other thoughts?
No, I think we covered it, other than just to remind everyone, these elevated standards that we spoke of regarding the Lloyd's of London and CalMutual's partnership, the evolution that I'm seeing in order to get a properly designed policy, irrespective of industry, that's going to be the new normal. That will be the requirement. If you don't have 2FA, you're going to need it. If you don't have the disaster recovery protocol, you will need to implement that. There will be investments, and they will not be inexpensive, but you'll need it because you do need the insurance. It's just that financially and the team of experts is too important, but just as important, you need to prevent the loss from even happening. And these will be investments. I think, Kevin, maybe you could comment on it, but I look at it as a mandatory cost of doing business now.
Yeah, no, it is. And I think what's happening now is people are being forced into what I would classify as common sense behavior. The one thing I have to comment on as the outsider in the insurance thing is, we spent months in that negotiations with Lloyd's of London on the changes and on what the expectations, many phone calls with high-end folks that they're discussing, well, what does breach prevention really look like, and how can we keep extending insurance without costing ourselves the house? And having done that, I can tell you, for those that are watching, insurers are not playing. They're getting very serious about the bean counting that is normally insurance. And if you think you're going to get away with dodging or fudging or kind of telling the truth on these questionnaires, I would be very careful of doing that, because they are going to scrutinize that in the future. And, in the end, they can just give you back your premium and not cover. So it's important that you do what you agree to. It's very important.
That's right. You're signing off on that information, and it's called a material breach of a material fact, right? And so if that would change the underwriting discussion, if it would have come up with a different underwriting solution based on what you fudged, Kevin's right. They can return your premium, give you one of those, and this never existed, and now you're out there on your own with the house on fire. So you don't want to be there, right? Yeah. And they will call. I'm sorry, go ahead.
I said it's important to have insurance that actually works when you need it.
Yeah, That's right. And they are going to call. They're going to probably talk to your tech folks. They're going to ask a second round of questions. That is one thing that I would say is right now in our industry, cyber is fairly new. It's a youngster on the block, and there are not what we call standard ISO forms here. Okay, which mean a lot of insurances that have a standard basic at least form. There can be supplemental forms, but there's basic form. That is not true with cyber. So we get everything from the 1 or 2 page yes, no, fill in the blank to the 60 whatever page you were talking about. Some of them are really insane, all right? And they get down to minutia, and there's all it's all over the place. And so are the policies. And sometimes they'll use different words for the same coverage because there's not a standard yet. Yeah, I think it will come, but it's not there yet. So you have to kind of be able to decipher all of that to be able to get an apples to apples comparison. Paul mentioned the moonlighting, which is something when we were putting together this program for Cal Mutuals. I mean, we had to explain to some underwriters, and it took a lot. That was a heavy lift to get them to give us that moonlighting.
Yeah.
It was a heavy lift, but most people don't even know what that is, and it's kind of a big deal. So, anyways, those are.
I was going to say, let's check with Christian and see if we have questions out there that are waiting.
Yeah, so just a reminder, everyone, if you have questions, you can post them on the chat box up at it might be showing in your little box or up at the top. And then we can go through those and as many as we can. So we'll give it a minute here and see what we get.
Well, I can give you an example of what moonlighting is. I just thought maybe we didn't do that.
Well, importantly, why does it matter? I mean, we talked about if it's an act of war or a nation state actor, then the coverages are excluded. So you guys came to the conclusion some of those folks are doing the work on the side, right? So what does that mean necessarily to the insurance?
It means that they get coverage because we got them to agree that if it was a moonlighting situation, which now takes the onus, and instead of putting it on the victim, so to speak, it now puts the onus on the insurance carrier to show that it was not moonlighting. So that's kind of how we went about it. But some of these guys, to give you an idea of what that is, I'm just going to say it out loud, is for an example, I'll give you a hypothetical, that there's a Chinese city where they sit and do this all day long, breaking into American and European networks and such. Now, that's what the guy does by day as lieutenant, whatever he is, right? And then by night, he's watching porn and playing video games. And, oh, yeah, by the way, doing some hacking on the same computer. But he's not doing it as Lieutenant so-and-so. He's doing it as Bob. And so Bob isn't actually doing a state acting thing, although he may be using the computer but he's off hours. So that's moonlighting. It's not being done under the direction of the state. It's just being used and kind of abused on his end, but that shouldn't eliminate our coverage. And now with moonlighting, it doesn't.
Okay, we have a question here. It says, what key questions should we ask ourselves to determine if we need insurance? We are a museum with very good mitigation for our industry. My answer would be very simply, everyone needs insurance. Everyone is being targeted. It is a random multinational, international scanning effort. They're looking for any vulnerability they can find or any opportunity they can find. In fact, small businesses are in large part the bigger targets now because they're known to not have the more effective mitigation. Spam, for example, and BEC or business email compromise and phishing attacks are done to millions of people at one time. It isn't like they're sending it to you specifically unless they're trying to do some sort of disintermediation between you and a bank. But if they're sending something trying to get you to enter a credential or to make a mistake and click on a link that does a download of malware, it isn't targeting you specifically most often. So my answer is, if you're standing upright, you have a business that you care about that's worth more than $10, you should have insurance. That's just how simple I can make it.
And that's what I was saying about you sit down with your broker and your CFO and you just say, how strong is our mitigation? How much do we really need to insure for? What do we not have to pay for in a policy? And where are the golden, where as I say, where are the crown jewels and what are we trying to protect? And let's make sure we protect that. If you balance that out, I mean, that's really starting to get into real risk management, but as Paul mentions, with the things that the underwriting community is looking at now, you will have to have a minimum standard that I'm sure is higher than you're thinking about. And you can't put in multi-factor authentication on a big network overnight. I mean, it's not quite that easy. You pretty much have to have some organization to it. It takes time to implement. There's training that goes into it. There's lots of endpoint things. I mean, there's things that have to happen. So it isn't like you call up and say, "Oh, we want the policy tomorrow. Don't worry, we'll put in FM or 2FA overnight." It's not going to work like that. So there's going to be some lead time. If you're going to have a renewal coming up, well, one little broker trick I'd say is if you have a policy now, ask your broker to try to extend it as far as possible at the current rate.
Yeah.
Because your renewal is going to be ugly. Okay.
Do you mind if I just jump in?
Go ahead.
I was going to just jump in real quick on the museum question. It was a really good one. You think the museum is not a big, it's not going to be vulnerable. It's not going to be a target. There's three exposures that I see for the gentleman that runs the museum. The first is funds transfer fraud, social engineering. The second would be, it'd be identification theft of your employees or your vendors or your trustees, where they come into your system and they take that information and then co-opt it as if it's them, their own information, and cause havoc with your employees, your trustees, or your vendors. And then you've got, unfortunately, the ransom exposure of locking down your system, stealing your data, or holding it hostage. And the only option is either to pay the ransom or to start anew, unless you've got a proactive disaster recovery program. It doesn't mean that the museum is going to be at the highest threat level, but those are three examples that, unfortunately, we write 4,000 public water systems and about 1,000 municipalities. So that's really my world. I see that a lot. I see social engineering, I see identity theft, and I see the ransomware. And ransomware is the most potent of the three, but a funds transfer fraud can easily run into the hundreds of thousands of dollars. So I just wanted to give some real life examples of what I'm seeing on the claim side.
We just saw
Kevin,
700,000. Go ahead.
I was gonna say, if you have one, if there was a hypothetical example of someone who was in a VoIP system or something into the system, maybe you could give an example of that.
Well, so we're talking about we've had situations where, not us, but we were brought in afterwards. Victim was doing cleanup and going through the process, and threat actor came on the phone and basically said, you guys are failing because here I am listening to your planning about kicking me out of your own network, to paraphrase the statement. And so one of the reasons why you want professionals is you don't just put away ransomware. You don't just clean it off a computer and go back. And if you do that, you're much more likely to end up with a network-wide infection, because one, it makes them angry, and two, it shows that you don't understand it. So they have more time to go do what they need to do. I really want to get to this next question because it's a really important one. We do a lot of schools, and we've had this question that says, if I were to give top 3 infrastructure improvements needed to implement by school districts, I'm going to say everything starts with patching. Everything after patching starts, and that includes patching, not just patching OS, but patching all applications to close vulnerabilities. Configuration and firmware on firewalls is also in the classification of what I would call patching now. 2FA is the next line of defense. In schools in particular, please remove administrator rights off of the local computers, because in almost every case you see somebody has decided that's the easiest way to manage the network and just allow people to install what they want, or they aren't using something like a deep freeze. And I don't usually give brands, but that's an example of a technology that automatically reverses back to the original configuration, so the kids and the other folks, and including threat actors, can't make modifications on that network. The other thing is it's really, really important to isolate the various parts of the network from the other parts of the network. If you've got students on a network, you do not want those students on the same network as the administration. You also don't want your IT staff using their administrative passwords and functionality to do non-administrative functions. And another thing I'm going to suggest is that you enforce every single site and every single configuration has a separate username and password. You don't allow the same username and password to be used across various systems. Credential stuffing is very real, where they take an example of a username and password, and we've seen this in professional industries as well, large businesses where they have 25 locations and all 25 locations have the same username and password. So without MFA, if you get your credential taken, you're cooked. It's that simple. So now that can be bypassed, but bottom line is it's 95% better than not. So I would start with patching and updating firmware in your edge devices. Firewalls being not updated have been a significant part of the global attacks that have happened in the last 2 years. So make sure they're updated as well. 2FA is critical, and isolation and removing those administrative rights, if you ask me, the things that could do the most positive impact.
It surprises me how often end users have administrative rights. It is insane. Okay, I mean, there's really no reason for that. And even the admin people, I mean, it's a best practices thing in my opinion. Even the admin people should not be using their admin when they're doing their daily work, except when they need to do something that requires admin. You sign off as a standard user, sign in as an admin user, do the little whatever you have to do, sign off as that admin user, sign back as a standard user, because if you get phished, if you get nailed somehow, whatever rights you have, they have.
Yeah.
So if somebody's gonna nail you, you want them to get standard rights. You don't want to have admin rights.
Yeah.
You reduce your the threat vector, and it just makes it it's a better practice overall.
So let me add one more thing that's really, really important. Your disaster recovery and your backup has to be isolated, and there have to be insider protections. And the reason for that is, almost invariably in a case, admin rights are obtained at some point during the threat actor's behavior. If you think that you as an administrator have a right to administer the backup, which would include encrypting it, deleting it, corrupting it in some other way, you have to be thinking all the time. Assume they have administrative rights at the point they get in. What can you do with that backup? And in our case, for example, we have an insider protection that says even if my team deletes our backup, it's 3 to 4 weeks before the system can even legitimately delete the copies that have been, quote, deleted. Really, all they're doing is deleting pointers. But the point is it provides additional protection. If all you're doing is putting a backup on the local system of data, that's a fail. You need system state backup. You need documentation and your credentials off the network. Cannot tell you the number of conversations we've had where we go, okay, so can you give us your network documentation? Would love to, it's encrypted. Can you give us the credentials to your firewall and your internet connection and your GoDaddy account? Would love to, it's encrypted. So that's another issue. Get your documentation off of the network somewhere in a secure place that is legit secure with MFA associated to it, and use separate credentials that they won't have. So that when you go to recover, you actually understand what was your network, what are the IP configurations, what's the firewall configurations, what internet connections did you have, what are the applications. Without that information, you're literally struggling to recover.
Yeah, there's the 3-2-1 rule that a lot of people probably know. You want 3 copies of your data. You want it on at least 2 types of media. You want one of them in the cloud. You add another one off-site, and check and run backup. See if you can actually restore, because it's incredible to me how often backup restoration fails. Okay, so if you're not testing it, you're not doing it right.
Yeah.
Okay.
And
so multiple media offsite, that's how you do it. Just in the cloud doesn't count. You got to have it in the cloud. Have a physical one that's off the network that isn't connected at all. A lot of people think, well, I'm doing a really good job because as soon as I make the change, it automatically backs it up. That's right. And if the bad guys get it, they automatically the encryption. It's bad. Okay. So you want to have one that's isolated off the network, off-site, that you have in your little hands like this, and you update it once a day, once a week, once a month, whatever. You update it periodically, but it is not accessible from the network. Anyway, those are just my thoughts. Any last minute thoughts from you guys, or any other question?
No.
We have a few more questions posted, so I'll move to
Sure.
the next one. So I'll read this one. Is is the 2FA requirement defined as true second factor or loosely defined, meaning a company can get away with multiple single factors, such as secret questions in addition to username and password?
I'll take
which,
that.
Yeah. And then there's a secondary part of that when you're done. So.
Oh, no, go ahead and finish.
Oh, okay. Which are all one factor of what you know and not true two-factor authentication. So is password, and then the secondary part is passwordless authentication allowed or even defined as acceptable yet for multi-factor authentication?
No. The answer is no, because it still can be something that they can learn from a keylogger. If it's something you know and you have to type it in, it's now been known by the threat actor. The point of out-of-band MFA or 2FA is that you have to possess it. Most threat actors don't possess it. So I think that should answer the question pretty straightforward. It has to be an out-of-band key or token or a randomly generated number or something to that effect. I want to get to this next question quickly because it's important. How will Ukraine conflict impact insurance coverage, active war exclusions for retaliatory ransomware attacks? Based on everything we've talked about in the last couple of weeks, bottom line is, if it is in any way shown to be an act of war or an act of even of a nation state, basically we can all assume there's going to be resistance on the part of the insurance to recover. There were cases last year where the U.S. government came out and made a statement about, we know this was XYZ state actor, and as a result of that, the insured or the victim is still in lawsuit now. And this is a pretty big case, trying to get the payment, and the insurance company saying, no, the federal government said it was an act of war, so therefore it's an act of war. So to answer your question, I think that we don't know yet, but I think we're in trouble if we get victimized right now and we can't show that it wasn't necessarily, or the other way around. So
Yes, and I would add to that. I mean, yesterday I was on almost I guess hour and a half, 2-hour meeting with FBI on some of this exact topic, and they are expecting retaliatory cyber attacks, and a lot of that actually is coming to Southern California. I know part of it was because some of it is also one of their priorities is the top 5 priorities for them is utilities, and so that's one of the reasons I was involved with it. But it wasn't excluding anybody. I mean, if you are even third-hand part of defense, if you're a supplier of someone who makes something for the defense, you're on the list. I mean, 6 degrees of separation, you're probably on the list somehow. And so you need to be aware. And again, if we're doing these mitigation things, you're going to need it to get the insurance anyway. You're going to need it for your own protection. Again, don't be the low-hanging fruit. That's it. If you do some of the basics we talked about, you're going to leave 95% of the exposure in the dust. All right.
And they're going to move on to something else.
They're going to go to something else, man. I mean, you don't have to be completely bulletproof. You just have to be better than the next guy. Okay. That's all you got to do. And they're going to get the next guy. I mean, that's just how it is.
So I want to ask this last question, and we'll call it a day. Run a little long, but I think it's been a good conversation, so we'll let it continue on this last question. There's always a risk with incident response post-breach reports finding blame to organizations in litigation. Any thought on work-covered insurance being protected by attorney-client privilege? Well, first of all, if you're writing reports, you're already making a mistake. All reports should be verbal. We strongly recommend that you keep your reporting between your attorney and your executives. Our remediation teams do not make any declarations throughout the process of doing investigations. It's not our job. We are remediators. It is up to the incident responders, the the containment team, and the attorneys to determine what happened. So it's very important that you keep any conversations out of text, out of email, out of your messaging systems that make any comment to the determination, because one, you don't know that to be true, and two, it could later cause questions that are either unnecessary or inaccurate. And anything that is generally done through and by and under the supervision of the attorney has a chance to have privilege. Privilege is a pretty weak thing these days because layers have been pulled back, and I'm not an attorney, so I'm commenting on experience we've had of late. But the reality is, if you don't start with that privilege, keep all conversations within that privilege, and maintain the attorney's consulting over that whole conversation. Whatever comes out of that, outside of that coverage or privilege, is one, no longer covered, and two, can be the vein or the road back to uncovering other things that may have been covered under privilege otherwise. So let's leave it at that. Any closing comments from you gentlemen?
Yeah, sorry. Before, if you guys want to close out, before I do, because we have about 10 minutes, so I just want to get to these last two questions, if we can quickly answer them.
Yeah, let's do it.
So I'll read them out. The first one, single sign-on is common in universities. This is the same user name and password across all applications. Can universities get insurance with SSO?
As the answer is depending on how it's configured, but SSO is actually still, as long as the initial login is an MFA related account, it's still technically protected by MFA. So it really just depends on how it's configured. But the answer is if it's true single sign-on, the initiated access to the single sign-on is covered under MFA, then I would argue it would be illegitimate for an insurance company to resist that. Can't say what they'll do, but I can't see any legit reason why they would.
Okay, next question. How long should I entertain forensics collections from an insurance carrier's forensics team that is delaying my recovery, thus costing money?
So that is a really important question from two views. One, do you really think there's going to be criminal charges that are going to come? The odds are about zero that they will. The insurance company, if they're paying you downtime losses, will often find a balance between that too. They're going to be like, hey, if they're down extra several days because of us, it's unlikely. So the answer really is a value to your business. We've had people say, I don't care, I'll wait a week. We've had other people say, you know, frankly, I don't care about the logs at all. Just go, because I'm losing $5 million an hour or less, you know, or more. So I think that's really comes down to your value discussion. If the insurance company is guiding the recovery, unfortunately, you may have to push to get them to say, okay, we don't need those, because it is true, if you're doing forensic recovery, it can take days in some cases for very large systems to do the copy that's required in order to do a true forensic investigation. So, but that's kind of a negotiation between you and your insurance provider. We often have those conversations. I've only seen one case where the insurance company demanded forensics, and that was because there was some thought of an insider might be involved. Otherwise, they leave it up to you about your desire or your willingness to forego the potential for criminal charges. Because without logs and forensics, your odds of getting are zero. With them, your odds are just a little less than zero.
All right, we'll make this the final question, and then you guys can go to your, any final comments. But what stipulations do we need to be aware of in the event that the bad actor is an employee rather than an outsider?
Wow. Go ahead, David. I'll let you take that first.
Oh man, that is a much harder question. That's right. So insider, I think probably what you're talking about, at least the one that we worry about most, is a past employee, rogue employee. That's usually what happens. And so, again, when we come to the mitigation, if I can at least form it that way, I'm not 100% sure that's what you mean, but that's what I'm going to take it as. When someone leaves the company, the moment they walk out the door, their credentials should be withdrawn. Okay, I mean, many things that we have seen in the past, including a water company in Florida, was where a past employee's credentials still worked. And they didn't work. That happened in Australia too, I think. They didn't work there, but they were able to sign into the network. Now, for whatever reason, they were pissed off. I mean, I guess they get fired or quit or whatever, however it worked, they weren't happy. And so they came back in and started wreaking havoc. Of course, they already understand how the system's put together. And that kind of insider threat idea is a legit concern. So you need to take steps right away. I would say make it before they hit the door. Okay, while they're getting walked out of the building, someone should withdraw.
Exactly what we do. Yeah.
So, Paul, what do you think?
We're literally in another room waiting while they're doing the HR stuff. We're already working to lock them out, and we often have a pre-planned checklist that we spend a week determining what they have access to. If they're sensitive IT, that can be a 10-page document of all the things we need to do while they're in the HR or very quickly thereafter.
Yeah, so the question is a current employee, and David, I don't have a solution on that. That's a fundamental flaw in cyber policies that I'm seeing. If it's an active employee that's going rogue,
It's a lot harder. It's
is
gonna,
there, yeah, I don't know if there's a solution on that from an insurance standpoint.
yeah, because it is the insured themselves, right? Because the employee is an insured, so they're going to have an insured versus insured exclusion sort of a thing. But I think most of the ones, at least the ones that I've seen, have been the past employee or the recently or
Yeah.
past employee.
Well,
That's mostly what I've seen. A current guy who's getting a paycheck. I mean, I suppose the exposure exists. I just personally haven't seen that happen a lot.
Well, we have, and I can tell you one way you can address it. And again, I would suggest getting a consult with counsel, because I'm always careful to tell you what is. I can tell you what I think. So the reality is that if you have disclaimers and banners in the network that say what people are allowed to do and not allowed to do, even as an employee when they enter that network, and if they violate a documented policy that they are aware of, I believe now you can claim that it is outside of the company itself. It's no longer, the company that did it. It is somebody who's not following the documented policies and has violated that policy. The other thing that's important is the difference between if you're a fiduciary and you're not. So if you're a fiduciary and a signer and you make a stupid mistake, such as giving away money in a BAC, and I don't mean to say stupid, it is stupid, but it's if you make a mistake, that the insurance company is often going to say you voluntarily gave up the money, so therefore we're not paying. So be very careful with the differential between a breach and a network intrusion and the act of voluntarily giving up money. They're not the same. And many of the cases we see are voluntarily giving up money.
Right.
And
That comes down to risk management and procedure review, and making sure that you have double checks, even triple checks when there's money being moved around. It's obviously substantial sums of some sort, pick a minimum, whatever your floor is. But at some point you want a double or a triple check on things. And banks get told it has to be from this person on the phone or not, and whatever. There's all kinds of things you can do, but you need to have some of those risk. That's about the best you can do, I think. But oh, my siren's going by, so I'm going to sign off. Paul, what do you think?
No, I agree. And I think scope of employment, to what Kevin was saying regarding liability for a current employee, if they're violating term of service, violating company policy, this is where counsel comes in. But it does seem like you would have a strong argument that employee was outside of his or her scope of employment. But that is a hole that everyone needs to understand in these insurance policies.
And I don't think the exposure is huge for the current.
So are we good on time here, Kristen? I just want to make sure where we are.
Yeah. So there's if you have any questions that were posted after, I'll make sure I send them out to Paul, Kevin, and David, and they can follow up an email. We have a minute or so if you guys have any closing comments, and then we'll wrap it up.
Only comment I'll make is use common sense. Don't think that you're too small, that you're not a target. You are. Some of the most horrifying and sad conversations I've had is with a small company who had to liquidate their 401k to pay a ransom because they didn't have the insurance and they needed to keep the jobs of 25, 30 people, or they didn't have the 401k and they literally shut down. We know of 200 employee companies that have closed up. So it's time to think. The Ukraine-Russia conflict has caused people to pay attention in a way that they haven't in a very long time. Please use this as an opportunity to act, not just to think.
Paul?
Just 2 comments. It's important to have a qualified MSP that you're working with regarding security requirements, and equally important, a qualified professional broker that understands the true exposures, the policy language, and the solutions that are available to you as it relates to cybersecurity insurance coverage.
All right, and I'm just going to finish off by thanking these 2 guys who I have to tell you, I appreciate and call often for advice and to bounce ideas off of, and respect them both very, very much. Thanks to everybody for tuning in today, and I think we're going to call that one a wrap, babe.
Thank you, everybody. Thank you, David.